Tuesday, March 10th, and I am back after having traveled and then gotten sick. I did just one show last week, but here I am. And going forward, we're jumping back into it. So, first thing, yesterday after the market closed on Monday, Trump announced that, told CBS that, quote, Iran is very complete, dot, 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 pretty much. Um, and so markets traded up on this news. And what I want to say about that is markets are trading on headlines right now and not fundamentals. So put a pin in that. Let's get back to that. But first thing we need to talk about is oil, the importance of oil in the Persian Gulf and the Middle East, because it's not just a barrel of oil, it goes into so much more production and growth, inflation, so much more. So there are a couple of experts that I like to check in with. Oil experts who are also geopolitical experts, Helima Croft and Paul Sankey. And they both see that, well, this is the first time that the Strait of Hormuz has been closed. Okay, the first time. Look at the GPS, look at the ships sitting there. There are one or two ships that turned off their transponders and played chicken with a few mines to make that passage, but absolutely 100% it's closed. From here going forward, both of those experts see that insurance costs are going to be significantly higher going into the future as a permanent condition, which is going to raise the cost of everything, oil and everything related to it, coming in and out of the Persian Gulf, and that the Middle East itself is now going to demand an investment premium. We've had financial centers open offices there, data centers and tech have invested in the Middle East, but now those investment dollars are going to demand more as a risk premium. Just look at Dubai and Dubai Airport and the utopia that we've seen it to be over the last 5-10 years is completely changed. So costs are going up. That is but oil is everywhere. Okay, oil affects manufacturing costs, it affects transportation costs, it directly affects inflation and growth domestic product and growth itself, which means that it rolls right into the earnings and stocks of the companies that we invest in. So it is widespread and not just a barrel of oil. For example, not I haven't heard anyone talking about the fact that helium is completely shut off from being exported through the Persian Gulf. And helium is a key manufacturing essential gas for the manufacturing of semiconductors in Taiwan. It's used to cool the process in manufacturing and for essentially leak detection, all kinds of important things in manufacturing semiconductors. And so even in the next few weeks, we might see a dramatic shock to the output of semiconductors coming out of Taiwan and Taiwan Semiconductor, TSMC. So it really has a massive ripple effect. And also the Houthi rebels haven't been talked about in a while. Over the past few years, they've had a dramatic impact. They've shut in the traffic through the Suez Canal by up to 50%, and no one talks about that. So we really do have some important considerations coming in and out of the Middle East and the costs that are going to rise in so many different ways, inflation included, due to that. So getting back to what I said about markets trading the headlines, it's not trading the fundamentals right now. And to me, that's an untradeable situation. Okay, just in the last, not even 48 hours, we've seen oil jump up to $120 a barrel and come flying back down to $86 a barrel. We've seen the S&P hit, go down 3.5% and come flying back 4.5% to be plus one. It's a crazy market. It's not something that is based on reality and earnings and fundamentals. And so for right now, I am absolutely stepping off to the sidelines and asking myself, like in the old movie Jaws, when is it safe to go back in the water? So where were we going into this so that I'm prepared for when things, knock on wood, stabilize and we get back to the real market and the fundamentals of it? Where we were was that we were in a software sell-off, okay? We had concerns about private equity and private credit. We also have a new Fed chair coming in May and June, Kevin Warsh, and that historically has been tested by the market, tested to the downside, that is. We also have a midterm election year, which again has put stress on markets to the downside. And we still have lingering doubts about the spending from the largest technology players and are they going to get that return on investment? We have almost 4.5% unemployment and inflation last month ticked up, not down. So we've got an increase in inflation, all of which are concerning. But my first job and the in my investment thesis is to always look at the risk. I am always bullish, but I am always looking at the risks first. So right now, to recap, we've got the Middle East, which is who knows what is going to happen, with that. And then there's the underlying market that we had going into this that was fully valued. And then there are all the risks that I just talked about. Okay. So I'm watching the VIX, for example. It spiked up to the 32, 33 level. It's back down around 23 and a half now, which is still elevated. And remember, the VIX is that fear index that basically gauges the market going forward a month from now and the fear that it is hedging for the next month, hedging with trades, with pairs trade and trades. And so it's still at 23 and a half, which is still high. And I want to see what happens in the Middle East, and I want to see that come back down into the teens as well. But that is the current fear and psychology that the market sees for the next month. Okay, so I just want to keep things simple for today. It's great being back, and I look forward to going through this difficult time. And I am 100% in tune, and this is the market perspective. I can't even talk about the human suffering and cost of all this, but um, just to remind you, I am a long-term bull on the market, but I am protecting and preserving my money right now. And this in general is a very precarious, very concerning situation with some underlying fundamentals leading into this, which were not favorable to begin with. So I have extra caution right now. I hope you do too. It is great to be back with you. I hope everything is going well in your lives and in your portfolios. Please be cautious. I'll see you tomorrow. Cheers.